So, good morning. Thanks everyone for joining us today. I'm Tiffany Tauschak, and I'm the president and CEO of the Greater Des Moines Partnership. Really appreciate you all taking time to start your day with us at the partnership and this great group of panelists. We're excited to host today's roundtable to learn about the leading trends in one of our region's key industries. We have three leading experts in the insurance industry to give their thoughts and insights related to trends, challenges, opportunities for the insurance industry in our region and, of course, across the country. So before we begin, I just want to note that this is an invite-only event, a virtual event, of course, and it's open exclusively to our Greater Des Moines Partnership investors and affiliates. Additionally, this conversation is considered off the record. So with that, any use of AI note-taking or other transcription tools is prohibited. So thank you for your assistance and cooperation on that. Now I'm excited to introduce to you our panelists. We have a wide range of topics here to cover. We're going to start off with our panelists giving a quick introduction of themselves. So we have Greg Blythe, President and CEO of IMT Insurance. Greg, tell us just a little bit about yourself and IMT.
Yeah, thanks, Tiffany. Appreciate it. Myself is pretty easy. I'm a local product, born and raised here in Central Iowa, West Des Moines, graduate of Valley High School. Worked at IMT for 32 years, and for about the last 8 months or so, been privileged to be in the role of President CEO. So IMT, we are a regional property and casualty insurer. We specialize really personal lines and smaller to mid-sized commercial lines. We write business in the upper Midwest, with our home being right here in Iowa.
Wonderful. Welcome, Greg, and congratulations on your new role as President and CEO. So next we have Ken Kadamatori, President and CEO of Guide One Insurance. Ken, tell us a little bit about yourself and Guide One.
Good morning. So Ken Kadamatori. I'm a transplant to Iowa, moved here from the East Coast, and I have to say we really enjoy raising our family here and living in Iowa. And I do appreciate the partnership and everything you've done to make that transition go very smooth for us. Guide One's nearing 80 years old. We are a commercial property casualty insurance company focusing on areas where people need help, religious organizations and human services for nonprofits. It's a great company, great mission, and people that work for our company are very strong believers of what we do and for the people we try to help.
Wonderful. Thank you. Thank you, Ken. And we are so glad to have you in the region. Yeah. So welcome again. Glad to have you. And we also have Scott Jean, our president and CEO of EMC Insurance. Scott, so good to see you.
Good morning, everyone. Thank you, Tiffany. Yeah, so I started my career at EMC 35 years ago as an intern. So one thing I like to tell people, I've collected two paychecks in my life, EMC and Hardee's. But I started as an actuary and then took on the role of president and CEO 6 years ago. So EMC was founded back in 1911, so been around 115 years. We write commercial lines only, so we exited personal lines back in 2018, but I still have some familiarity with what's happening in the personal line space. But we write about $2 billion of premium across 46 states across the country, with 17 regional offices and broken into 10 different regions across the nation. But we are headquartered here in Des Moines.
Thank you, Scott. Great to see you. Great to have you all here today. And thanks again to our attendees for joining us. So I'm going to kick this off. I'm going to ask some questions, and to our attendees who are joining us virtually, feel free to drop any of your questions into the chat box. We'll get to some of those as we have time. We're scheduled until 8:45, so let's jump right in. Our first question, and I'm going to start with Ken on this one, the overall health of the insurance industry today. What are your thoughts?
Yeah. I describe the commercial property casualty insurance business as stable but uneven. The property is generally healthy. Casualty is trying to get there. The theme that's very important for us is discipline. Discipline around underwriting, valuations, and pricing. That's what's really been carrying property over the last couple of years, and that's where casualty needs to ascend to.
Thank you. Appreciate that. Scott, same question.
I would agree. I think that overall the industry, it has stabilized, but it does differ by region and where you're at. The California market is very unstable. And I would even say in Iowa, and we can maybe get to that a little bit later, because of the weather we've had, the derecho back in 2020, the environment in Iowa is a little different, especially in the property side than maybe other states. But there are a lot of factors that are really driving what's happening within the industry. And we can talk about more of that later too. But the increase in number of storms, what we're seeing with convective storm activity, legal system abuse, a lot of things are driving costs. But overall, I think the industry is fairly healthy. But I think one thing that's important for everyone to understand is most property and casualty insurers, we're not making excessive profits every year. We just had a great year at EMC with a 96.7% trade combined ratio, which we announced last week, the most profitable we've been in 20 years. But that means we made 3.3 cents out of every dollar on underwriting. So, that's a great year for us. So, the industry as a whole is healthy, but we don't make excessive underwriting profits by any means.
Thanks, Scott, for calling that out. Really appreciate it. And congratulations.
Yes, thank you.
Greg, same question.
Yeah, thanks. I would agree largely with both what Ken and Scott had said, and I'll just kind of add on to what Scott said. There is a variability within the property and casualty insurance industry. I mean, it's a long-term game. It's really difficult for anyone to kind of look at any one year given results and say, okay, yeah, that market or the industry as a whole is keeping excessive profits or anything else. So there is a lot of volatility and certainly driven, as we look even on the personal line side, because both those guys commented a little bit on commercial. Personal lines has been very difficult. There has been a lot of convective storm hail loss, especially in the upper Midwest over the last 5 years, starting with the derecho. So as we approach that and what that looks like, I do think 2025 was good. There was a restoration of the capital base in the property and casualty market, really up and down the entire ecosystem from reinsurers all the way down to primary carriers. So feeling good, I would say they use stability. That's what I would say. It said largely the market has stabilized and we're feeling good about the outlook.
Thank you. Thanks, Greg. Appreciate that. Now for each of you, kind of do the zoom out. How does what you're seeing here in our region with your industry, specifically the property and casualty insurance side of things, how does that compare to what you're seeing nationally? And for this one, let's start with you, Scott.
Well, I'll kind of give a personal example. I'm actually home today. Why am I home today? I'm meeting with a home inspector because I'm going to be on my fourth insurance company in the last 7 years. And I haven't had a claim, right? But three different carriers that I've been with, because we don't write personal lines at EMC, three different carriers that I've been with have canceled me because they're exiting personal lines in Iowa because of all the storm activity that's taken place. So, even though the market might be good in other states, it's been a lot more challenging in the state of Iowa. So, it's been the property, but I would also say in Iowa, the regulatory environment is great, and we don't have the legal system abuse or tort reform needs in the state of Iowa that maybe other states do. So that's a very positive thing. But as Greg indicated, that there is so much difference by even line of business and by region that really drives a different narrative depending upon where you're at and what you're doing. For us, we write a lot of schools, construction, manufacturing, and in Iowa, that market has been up and down, especially the school market with property for many years when we've seen all the storms. It's made it challenging, but the good thing was we saw a reprieve from weather in 2024 or in 2025, which is setting everyone up for more stability and more surplus to be able to grow into the future.
Thank you. And good luck with your meeting today, Scott. Greg, same question.
Yeah, Scott feels like we should put you in contact with one of our agents. You're kind of our targeted profile of a good insured, good risk. So yeah, we should do that. No, all kidding aside. So, I think everybody likes to think maybe that the Midwest and certainly central Iowa is maybe insulated from a lot of national trends, but especially on the casualty side, I think we still succumb to a lot of things. Maybe it's slower. Things happen on the coast, maybe a little faster than it does, and we see some of the things. So certainly, even on the casualty side, as we all came through reinsurance renewals, talking with our reinsurers, about our lines of business, maybe where some of the risk existed, we certainly can identify and see some of those things, and we're aware and addressing those. Scott alluded to some jury things and some legal challenges that we have out there, and we are starting to see that. But I think our biggest difference here lately has been really the volatility of storms. And in the Midwest, we certainly had seen that. And I know we'll get into that in a little bit. But I think from that standpoint, certainly in central Iowa, what we're seeing is a lot of rural residents moving into urban areas, and especially in central Iowa. So there is a ever-growing concentration management that we all have to look at as we look, from literally Story County all the way to Polk County and beyond. And I think that's something that we are better equipped to address and handle. But it's certainly something that's happening in central Iowa that has been a growing risk over the years.
Thanks, Greg. Ken.
I would just add, we write in 50 states, and Iowa, compared to many of the states, is very favorable from a legislative and from a judicial perspective, which is very, very, very welcoming. I also really enjoy the ecosystem that we have here, and I think it actually works together between industry, regulators, legislation, and even the university that support us. I'd say this partnership gives the region a lot of stability that honestly isn't norm in other states. So it is challenged by weather, but most of the country, you think of, we talk about hail, that's half the country is impacted by that. So it's getting more difficult to write, and Iowa's no difference in having the same exposures as other parts of the Midwest and South.
So you've all touched on weather impacting your jobs. It makes me curious. How closely are you watching the weather these days, and compared to years ago? It has become such a hot topic.
Well, Tiffany, I'll give a little statistic. If you look back at 1980, 1981, the insurance industry average, and so consider this is after we have trended every single loss forward to $2025. So when you do that, 1980, 1981 had 2 to 3 $1 billion industry events every year. Fast forward to 2024, 2023, we're looking at 28 to 29 billion-dollar events every year, up from 2 to 3. So that's obviously a significant change over the years. So part of that has to do with the frequency of severe storm activity or wildfires or whatever it might be. But part of it also is we've got so much more urban build out. So you look out in Waukee, 10 years ago, they were farm fields. If a tornado went through there, a hailstorm went through there, maybe one farm was affected. Now you've got hundreds of millions of dollars of property exposed that could all be subject to insurance. And so the combination of those things, two things, has put significant pressure on insurers to be able to make an underwriting profit because of the storm activity. Now, I will say, years ago, I would sit down when there was a major storm event happening, and I would have an exposure map up on my laptop, watching to see what the storms are hitting. Tornadoes going through here. I'm like, oh, do we have any exposure there? And I recognized that was way too stressful, so I put all that aside and just say, whatever is going to happen is going to happen. I'll have to deal with it later.
Yeah, we had someone in our company famously say, well, there's nothing you can do about the weather, so why even worry about it? And obviously, we have to manage through it. I think the thing I would add to there, Scott, too, is this. When I started here at IMT, that it always used to be get to August 1st, right? And once you got to August 1st, the storms largely were done here in the Midwest, and you could kind of, coast through the rest of the year. But now we know that that's not true. And even a few years ago, we had a December 15th storm event, tornado derecho here in Iowa. So those things are happening year round. It's something that we have to be aware of. But I would echo, if you literally sit there and stare at the radar all day, it's going to drive you insane if you're a PNC employee. So.
Yeah, I would just add, we plan for this. We all know what's going to happen. Our budgets reflect a load for CAT events, and so you can't get emotionally involved with that. But it is a challenging business because, as Greg probably says, there's no season. It's multiple seasons that last all year round, and you can model certain and feel pretty good about some catastrophes, such as Florida wind. But there's no models that really support the whole derecho, hail, and the whole Midwest, which makes it, very, very difficult to really understand and price appropriately our risk because you just don't know. So that's the challenge of it. You think you have some models that support your business, but they need to continue to evolve and really, be more predictive. And as Scott said, I mean, there's such a tremendous concentration of risk, and all these Midwest cities have grown tremendously. That just creates more exposure for us, which pronounces the size of the impact when there is such an event.
And one thing I'll add too is as you step back and look at the bigger picture, like you look at California, they had the wildfires last year. And we're seeing more frequency of wildfires, but that had a significant impact on the industry as a whole. But you even look at this year, all the cold weather that went through the South for a couple weeks. There is snow falling and ice and roofs collapsing, frozen pipes claims. Maybe 15 years ago, 10 years ago, the number of cold weather events in the South has increased since then. So you have more of those types of events. So it's not just your convective storm. We have exposure to storms and other types of things year round.
So, but beyond the weather, what other major forces are really reshaping or changing property and casualty insurance industry right now?
I would just
Greg, oh, sorry, go ahead, Ken.
I would add, I mean, really the biggest headwind we have is the litigation dynamics that are going on, specifically in casualty. Something that might have, well, we're here to pay claims, and we happily do that. But a claim that may have been $500,000 5 years ago, now attorneys want $5 million for that. And companies are not set up for that type of increase in reserves, and you wonder why prices keep on going up. Is that just the aggressiveness from either litigation financing or lessons learned from litigation financing and judicial sensitivity into someone's got to pay has caused the industry to really reel from not having adequate reserves and trying to play catch up. So just the pure pace of loss exposures and loss associated with casualty is significantly outpacing just general inflation trends. And there's just really no end in sight on that. And as Scott said, insurance companies, especially mutuals, don't make a lot of money. Well, our return on surplus is 2 to 3%, and that all comes from our investment portfolio, not from our underwriting. So it is a challenge, and I think that's something that keeps me up at night in terms of the amount of money that we spend on casualty, and it's going to continue.
Greg?
Yeah, I extend on that a little bit too. And one of the things, I mentioned earlier, we just came through reinsurance renewals, and on the past 2 or 3 years, though they were focused on property, and how are you managing through the storm cycles and everything else. And then, especially this past renewal season, it did focus on our casualty book, and we're not as big on the casualty side as these other two panelists, but even then, we're talking about significant impacts. And the biggest issue, I think, is this, at least from our standpoint. Reinsurers are now kind of putting pressure on us. For our insureds, we have several clients who really would need big umbrella protections and excess sort of limits. Their balance sheets, their own personal assets would suggest that they need those protected. And in the past, it really wasn't as big of a deal for them to get the type of limit they wanted. But now reinsurance largely is saying to us primary carriers, we're the ones that are exposed on these treaties and that type of risk, and we're unwilling to accept that volatility in large doses. So, balance sheets again up and down the line from a reinsurer and a primary carrier are also impacting what Ken alluded to. And then Tiffany, you asked what other major forces. Obviously, it's inflationary pressures have been in the news a lot, and that certainly from a cost of material and availability of auto parts and things has really been impactful. But the big one, obviously, that's coming here and is artificial intelligence, and what does it mean from a technology standpoint and everything else. You still got private equity influence and some of those others. So there's always something. I think that's the way to sum this up, at least from my comments, is there's always something major coming along. It's just what does that look like? And for right now, I think it is the pace of all of the changes in the cycle that we're kind of going through, whether it's inflation or certainly the impact of AI.
Thank you, Scott.
Yeah, so this is actually a topic I'm very passionate about, and I actually do a lot of speaking around the country on this particular topic on the legal system use side. But one thing I thought I'd mention real quick is all of our participants may not be familiar with reinsurance, and we've mentioned
Yeah.
reinsurance a number of times. Reinsurance is essentially insurance for insurance companies. So there are companies out there that will reinsure insurance companies for catastrophic events or if claims get above a certain amount. So that's costs that we have to pay to insure ourselves, to protect ourselves, and so those costs get passed upon along to consumers as well. But in regard to legal system abuse, and so Greg alluded to some of that and I guess Ken did too with some of the larger claims. Used to be 500,000 claim, now it's a $5 million claim. But I serve on the NAMIC board, which is the National Association of Mutual Insurance Companies, and they publish a number that says that the average household in America is paying $5,400 a year in legal system abuse costs. So what does that mean? It's trickle down economics. So because of these very large claims that are coming in that are well above the economic value or economic loss that anyone uh, experienced, those costs have to be passed along, through the cost of insurance, through the cost of reinsurance to the consumers. So if you have all these claims that are happening and all these lawsuits that are happening, insurance is more, so products have to be more. So it just ends up in resulting in these very much an increase in all costs, which then get passed along to consumers, and it results in $5,400 a year. So, part of that is what we call third-party litigation funding. So you've got investors that are coming in and investing in lawsuits. So what we might have been able to settle a claim for, someone gets injured and a fair settlement is $500,000. Now, the lawsuit comes in at $50 million because an investor comes in and says, I'm gonna help pay for the litigation, but I'm gonna take, 90% of the winnings. But the jury never understands that, hey, even the person who was injured isn't getting most of the claim that's being paid out. It's the third party litigators that are getting that money. So all those things are really driving up the cost of casualty insurance. And, people want to blame the insurance companies and say, oh, they keep increasing the cost. We are just trying to pay the claims that keep coming due because of all the things that are happening in the environment around us that we have very little control over. Now, I spent a lot of time in Washington, even up at the Iowa State House, talking about some of these things, trying to help people understand those issues. But it's a long road to try to turn this tide at this point.
Thank you. Really, really appreciate it. And I think, Scott, just that transparency and explaining it so others are understanding is really helpful. So thank you for that. We do have a two-part question from our friend Corey McAnally with Principal. And of course, he says, thank you to you all for being here. Thank you, Corey, for being here. So his questions are, when you look at the insurance industry over the next 5 to 10 years, what change do you think will matter most and why? And then the next question is, how are you feeling about the talent pipeline in-house and with distributors? Who would like to start?
I'll start. So, I'm very optimistic about the industry. I mean, you want to be in businesses where you're foundational to the economy, and insurance is that business. Everything to make this commerce work within the country, you need to have insurance. You want to have an event, you need insurance. You have a building, you have insurance. You want to buy from other countries, you need political risk insurance or credit insurance. So list goes on and on. So you want to be in those businesses. So you're in an important business, and I think we need our tools keep on getting better to help us understand the risks that we face. And I think that the industry is doing a good job in making the various investments and thinking about risk management and helping companies manage risks more appropriately. But there's a lot of concerns. I mean, obviously, there's things we can't control, like climate volatility. I mean, it's still here. It's had. I mean, last year's wildfires, are becoming more and more prevalent. We talked about litigation and then affordability pressures. I mean, creates a lot of pressures on the insurance companies because each individual state governs their own insurance prices. So we have 50 different regulators that we deal with trying to get appropriate pricing, and they're getting a lot of pressure back from their constituents to say prices are too high and blame it on the insurance company. So we have a big gap in terms of perception of the industry that we need to overcome. And as we alluded to, with really no end in sight, with the claims from casualty increasing, severity of it, we're going to continue to have frictions going forward. So again, I think we're in a great industry. It's an important industry, but there's still some headwinds that we really need to face.
Thank you. Greg or Scott?
Yeah, I'll take a chance. So, I think in 5 to 10 years, obviously we are the industry of risk management. And I think the ways that we are not only communicating to our policyholders and others about how risk is really managed, what is the expectation of the insurance industry, and we'll kind of get back to some of the property management here lately, but it's really just understanding that it is meant to kind of piece you back together for when you have an event. It's not meant for a windfall. It's not meant to get you a brand new shiny thing. And so all of those situations that Ken alluded to, where insurance is important, it is not only sort of an education of the industry, but also just helping everyone understand exactly what risk management is in the insurance. There are all kinds of analytics and depths of things that are going to help shape that. But over that 5 to 10 years, it'll be super important to understand how we're really evolving in the concept of that whole overall risk. And as far as the I think it was the employee, how are you attracting, retaining? If I remember right, the second question, you know, nobody goes to college really, or very few of us do, to get into the insurance industry. Maybe Scott, with his actuarial background, is the exception here on that. But I was an accountant at Northern Iowa, and I had no idea what insurance looked like. And so once you're in it and you kind of understand, what the purpose of an insurance industry is, helping people out. Our motto is peace of mind in the moments that matter. So I think that's important to help people and employees understand, or future employees. You can take some pride, and we are an all-encompassing. I mean, we have marketing departments, we have things that it's not just underwriting actuarial claims, the traditional sort of insurance roles and opportunities. Our companies all have areas where, no matter what your background is, you can be involved in that. And so the attraction from just the general public, I think it's imperative that we kind of make sure that everyone understands what an insurance company really is all about. And of course, then culture, once we get them here, that's the big retention part.
Thank
No,
you. Scott?
I think one thing that Greg just talked about with risk was risk management. I think that is a big shift from where the industry has been in the past, going from the transfer of risk to the management of risk. And I think insurers, especially commercial lines insurers, are really stepping up a lot more to help companies and businesses manage their risks. So yeah, we could allow you to have an unsafe work environment, people get injured, and then we pay your claim. But if we can come in and help you have a safer work environment so your worker never gets injured to begin with, so they can be playing catch with their kids on the weekends, that's improving lives. That is making a difference for a company. It's lowering their insurance costs. As an insurance company, you can say, yeah, we don't want to help manage your risk because we want more premium. But if we're really looking at, how we can help our insureds be better and reduce injuries, that's really that management of risk. And I see that as a shift on the coming 4 to 5 years for a lot of companies to really differentiate themselves that way. And I could probably get into AI later, but I think AI is going to be a big component in shaping the future. So we'll maybe reserve that for an AI question here in a little bit if we want to.
Let's go there. Let's start talking AI. Scott, kick us
Well,
off.
before we go there, though, I'll also mention the talent, because that is very much related. Um, you know, I do see there are a lot of concerns in the future. We see all the trends that, hey, we're going to have fewer workers in the next 5 to 10 years and beyond than what we have today, and that's going to require a significant shift in how what the job skills are needed. Um, but AI is going to help shape that. And there's a lot of opportunity with AI, but really for insurance companies, part of the way we can utilize AI is going to be to help unlock the data that we have. We all have access to great data, but is the data in the format that we really need it to be to utilize and to send it to AI to help us make better decisions. So, my perspective on AI, our primary theme at EMC is keeping insurance human. And we launched that a couple years ago, and I strongly believe that insurance is a very human-based, relationship-based business. So in my mind, we have to be successful at keeping insurance human and using technology and artificial intelligence to make the experience better for our policyholders and agents that help us be more efficient and effective. So my philosophy then is the Iron Man principle, and maybe I think I've mentioned that to you before, Tiffany. But Tony Stark puts on a suit and he has special powers. He can fly, he can shoot lasers, he has defense mechanisms, but he is still the one making all the decisions. He's just an enhanced human compared to a robot who would then be making the decisions. And that's what I see the best use of AI is going to be, is to really enhance the humans, help us make better decisions, help us focus on the things that are more necessary. But that's going to change the job significantly. So people, maybe they're spending a lot of time in busy work and less time on value added types of things. So AI can step in and take over some of that busy work, allow us to grow our business more, allow our team to focus more on the things that really matter instead of the busy work. But there's going to be opportunities to automate a lot of things. Like one example would be a simple auto claim. Do you need to talk to an adjuster? Can you just take a few photos, submit them online, and have an automatic bid come back and tell you where to go to get your car fixed? And it can all be pretty transparent without having to have a human interaction. However, you got to also recognize that some people still want that human interaction. So, how do you manage through that? I think we could probably spend we could do an entire webinar on just AI, and I could talk for the next 2 hours about it. But I'd love to hear what Greg and Ken have to say.
Yeah, Scott, I think obviously, we're all addressing this in our own ways, but you're right. I think it is the enhancement. So many employees and really people, doesn't matter which industry you're in, everybody's worried that AI is going to take over all jobs and we're all just going to be sitting around kind of waiting for the machine to do everything for us. And I just don't think that that's couldn't be further from the truth. I agree wholeheartedly in the enhancement part. And honestly, in our world especially, it is allowing all of us to kind of get push aside or let a better process take place, especially on some of the things that occupy a lot of our time, top to bottom, and allow us to get maybe more into strategic thought or more into conversations and ideas, spend more of our time where we're going to move not only our companies but the industry forward as well. So that's kind of the exciting part in my mind about how AI will continue to be implemented. And obviously, like you said, we could talk for days on this, and it's both exciting and terrifying all at the same time, the level of AI and what it's going to mean. And you've got everything from just regulatory compliance, and obviously, as we as companies start to think more and more about how it can help with our processes or underwriting, claims was mentioned, all of those things. But in the background also there will be regulatory issues we have to make sure. I think it was Scott that mentioned, the data that we all possess has to be cleaned. It has to be in a format that we know that when we have that as an input, that the output we're getting out of AI at least can be reasonably looked at and seen by a human, so that we're verifying that it's not sort of garbage in, garbage out. And I think that's a big issue as well. And quite honestly, at least for us, we have so many legacy systems and so many different ways of capturing data that it's not as easy as one might think to make sure that data has integrity. So all of those challenges, but we're kind of addressing them. We're making sure that it is integral into how we process things and how we're thinking about things. The opportunities really kind of are limitless in this area, no doubt.
Yeah, I think you both raised excellent points. And, I think about the industry and it's changing, and Scott's view on risk management. It's going from very transactional to more consultative. So to be more consultative, the staff that we have to have, the skill set that needs to be intellectual curiosity. How do you think about risk? How do you manage risk? How can you make things better? And that's really a human skill that's needed versus systems. They need data to help inform those decisions and think about the various hypotheses and how you manage it, but you need that intellectual curiosity to drive that. And with that, we need to make improvements. And right now we talk about AI. AI for us today is mostly just blocking and tackling, trying to take the friction out of our processes. It's very similar to people familiar with robotics. That was the biggest thing in the day, a couple of years ago, all about robotics, and which was very helpful. Say like in cash applications, it took a cash receipt and automatically applied it against an open receivable and took people out of that process, which made us more efficient and it was more accurate. Um, we keep on, making those type of investments. Right now with our partner, the Mutual Group, we're very much focused on claims, making that process more efficient, reducing the handoffs so we can respond to the injured parties very, on a expedited basis with more an informative approach. But the real opportunity is can AI really help us refine our appetites and make better underwriting decisions in the future? And that's going to take a lot of work. So while there are many use cases that will continue to be explored, we're making sure that we have a responsible framework to do that, and that ensures that again the human expertise. And we keep on getting back to the word human because it's critical in how you interpret this stuff is very much front and center in that process, and we have the appropriate level of oversight associated with it. So it's very exciting. There's a lot of great things that could happen, but it's being done on a very measured basis.
And Tiffany, if I might add just one thing quick, and that is, and I think you guys would both agree, I've been up at Iowa State talking to business college and other universities about the need for critical thinking. And
Yeah.
that's one thing that we see with a lot of people coming out of college. They're very educated, they understand, they have all this knowledge, but we don't necessarily see people who are critical thinkers,
Yeah.
who have that intellectual curiosity, who are willing to ask questions, and so they just want to run a process. And as we move into the world of AI, that's going to require so much more intellectual curiosity, so much more critical thinking. If you go to ChatGPT and you ask a question, or you ask it to write something for you, you get a decent response back, but that's generally not the best answer, right? You have to interact, you have to go back and forth, continue to ask questions, or refine things to get the best answer. And so that's going to be a skill set that I think we're going to need even more in the future, not only of our current team members, but any future team members to really have that intellectual curiosity and critical thinking ability.
Yep, spot on.
So we have another question that was entered into the chat, and what you're saying in this question is also making me think about recent conversations we had with some of our healthcare investors who have talked about how everyone thinks they can just type in their symptoms into Google Chat GPT and self-diagnose. How do you think AI is going to or is already impacting the insured? So the insured versus your organization, how do you think that is going to change how you're responding based off of the insurer or the insured typing in and thinking that they can self-diagnose, so to speak?
I'll kick this one off
Yeah.
since we're doing that. But obviously, so many practical ways. I think we've all kind of mentioned the customer experience is first and foremost, and so how we are even putting some of the tools, whether it's chat bots, whether it's that ability. This guy just alluded to that interaction back and forth. Ask us a question. Maybe it's on the weekend. Maybe it's after hours. Our agents might want answers, and so how can we help? Provide those answers when we don't have a human right now on the other end of the line, and what that can look like. So that accessibility to the information that we have is top of mind for us as well. And I think also too, I mean, just our ability to enhance our own analytical capabilities, that we're able to slice and look at our data differently ultimately helps to get to a more proper rate for our insureds, our consumers. So whatever that may be, high or low, but based off of their profile, the risk characteristics of that individual commercial risk or individual, that's also going to enhance and trickle down. It may not be as readily apparent to an insured, but it's certainly going to get us all to a place where the actual premium that we're charging for the appropriateness of that risk is ultimately going to be a benefit to the insured as well.
Yeah. I would just add to that, we really enjoy working with people who are informed consumers, people who understand their business and think about risk. Because then we're aligned in terms of, of the issues and how we think and how we manage it. So the customer that or insured that better understands their risk management profile, things that they can do to help improve the risk profile. Think about their various economics, what their risk tolerances are, deductibles versus, maybe creating a captive. Work well with us because then we have solutions that can help them manage their overall risk, and they understand our pricing better and how we're looking at it, and we can have a more intelligent conversation about our view of the business versus their view of the business, and might not get to the answers we all want, but again, that's information is powerful, and I think it's a good way to get aligned on what they're buying and the appropriateness of it.
Great.
Yeah, I think it is important that I think it's great that our insureds are using AI. I think it's great that our agents are using AI. AI provides a lot of great insight. If you feel ignorant on a topic, you can get educated fairly quickly by just using AI to ask a few questions. I think the some of the dangers, though, as we focus on agentic AI and AI stepping in and automating things and doing things, there are some additional risks that insurers, maybe haven't priced for. And so that could change the products long term. But an example of that, it's not the way people think of AI, but if you go to Phoenix, you'll see the Waymo cars driving around. These are self-driving cars. They can pick you up at the airport, take you to your location, drop you off. So who is insuring those? And as we shift to more autonomous vehicles, that's going to shift the products and shift the liability potentially on some of these things that are happening. And I think a lot of lack of clarity as far as what that looks like for the future.
Mhm.
Thank you. Okay, we have about 2 minutes left, and if possible, I'm going to try to squeeze in two questions. So bear with me. And first, just to put an exclamation point on the AI conversation, Corey McAnally, who's joining us virtually and asked some questions. He and a group of other leaders through the partnership are creating a new AI fluency tool. So this is something that I would just encourage on any of our investors who are listening today to be sure to reach out to us and so we can get you as involved as you'd like to be in those conversations. So, okay, Ken, you had touched on just the overall perception of insurance industry today. Would you mind, each of you, and I know we're going to speed through this here, but how do you think perception has changed of the insurance industry? Is it for the positive, for the negative, neutral? What do you think?
Well, I think it's negative because of prices are going up, and obviously people are hurting and companies are challenged, and anytime you have inflation, it bothers us. When we go to the store, I mean, buy meat today, it's 3 times what it was. That bothers you, right? So and there's perception someone's taking advantage of you. So we do have a perception issue. People don't understand insurance. It's very much a commodity play. They don't understand what's involved with insurance, and that we're not the big bad person that's trying to make a lot of money off people's backs. That's not what we do. And we're here for those companies. We want a strong balance sheet, strong surplus to pay their claims, and that's our mission. So I think there is just a friction point associated with that we just need to continue to get that messaging out about you know why rates are what they are and what people can do about that to help improve it.
Thank you. Appreciate your candor. Greg.
Yeah, I'd echo that. And I think, as a broad industry, of course, we're P&C focused, but even the health care industry is probably not helping the overall perception of all insurance, right? I mean, everybody's frustrated, like Ken mentioned, across the board. And I do think, at least from homeowners and everything else, where we all have that cost of insuring one of the biggest assets, if not the biggest asset we have. The fact that I may not have had a storm, but yet my premiums doubled, tripled in some cases over the last few years, and I have a hard time understanding that. So there is some negative perception. I think it is an education challenge that we all have to make sure that people really do understand why insurance exists the way it does and how we really need to stay healthy with a strong balance sheet.
Thank you, Scott.
And I agree with everything said, so I won't belabor that. But I think it's important that we just continue to educate the public. Even forums like this have an opportunity to talk about some of these things, help people understand why costs are going up. We are just passing along the costs that we have. If everything costs more, your insurance has to cost more if you want it replaced if it's damaged. So just helping get that message out. And overall, the insurance industry hasn't done a good job of helping educate people. And I think we can do a better job of across the board of doing that.
Thank you. Thank you all so much. Very brief, because I know we're at time. Closing thoughts. Scott, start with you.
No, I just want to thank you for the opportunity, Tiffany, to be here today and to help provide a little insight into what's happening in the insurance industry. But I would encourage anyone who's out there. It is an incredible industry. There is so much opportunity. I think everyone has talked a little bit about the variety of opportunities that exist. We have communication people, we have video people, we have almost anything you can think of. We have nurses on staff, right? So engineers. So you can think of almost anything. And we probably have a position in insurance. And it is a fun and dynamic industry, even though it may not sound like it.
You made it sound very fun. Greg, closing thoughts.
Yeah. Again, thank you for allowing me to participate too, and enjoyed the conversation, even hearing these two. But I would agree. I think for us, our ask is consider insurance. It's as a career, but also when you're having conversations, as odd as it may be. I mean, we've sat around fire pits in the summertime, and my neighbors will ask me, and I'm like, okay, well, we'll spend 5 minutes on this insurance topic, and then we're done with it. But it is just helping to really kind of have an understanding of how insurance does need to operate within the overall ecosystem, both professionally and on a personal level. So that would be my takeaway.
Yeah.
And
Yeah, I would just add that, the great points, and I'm privileged to be on the panel with Scott and Greg. We're very fortunate that we have this strong university system around us. And, Scott, you do a lot with Iowa State, and there's great candidates that we get out of there. The Tippy School, where my son is, he's getting an insurance. Figure out how that happened, right? So, but it's a great program as well. So we're great that we have great programs around us that are very much connected to our mission. And I think it's a great business to be in. So we're very excited about the business. We know we serve a very important role in this company, in this country, and I think it's a great place for people to spend their time.
thank you. Thank you all so much for your time, for sharing your expertise, and for the candor today. Really appreciate it. And for all of our attendees today, thanks for joining us. As a reminder to everyone, we do have an optional investor and affiliate reception tonight at the partnership from 3:30 to 5. Feel free to stop by, say hello to some other partnership investors and affiliates if you'd like to. And whether you're new to the partnership or been involved in the past, this is really a great opportunity to gather and connect, certainly at virtual briefings like this, but also in person later today. So thanks again, Scott, Greg, Ken, really appreciate you. And thank you. Have a great day, everyone.
Thank
Thanks,
you.
everybody.
Thank you.